Thanks everybody. Nice to see you all coming back after lunch. We're always not too sure how many people would want to turn up to talk about operational resilience, but I think John Lonsdale this morning made it very easy for a lot of people to come in, given what he said about the importance of operational resilience. So very, very pleased to be here today to talk for 25 minutes with Mandy around the importance of operational resilience, the challenges associated with becoming operationally resilient from a bank's perspective, and some of the learnings that we can take from other markets as well as far as the journey that they've been on. Poor Mandy has to deal with having a consultant to talk to, so apologies in advance to that, Mandy. What that means is I've actually got some slides. So we are the first people to actually use some slides, which I kind of apologise for, but equally I don't, because it's quite a nice crutch.
It's good for our mental resilience, isn't it?
Yeah, it's quite a nice crutch to have. But we're here to talk about operational resilience, and as we learnt this morning or heard this morning, as I'm sure we all know, from a financial resilience perspective, there's been a lot of work and energy and effort done across the banking sector, very much led by the regulator, to become incredibly financially resilient, very, very well capitalised, unquestionably strong, makes the Australian banking world very, 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 very prominent. And whenever you go overseas, people do look with envy as far as the strength of the Australian banking industry, which is fantastic. The other side of the coin, however, is around the operational resilience, and to what extent, and John mentioned this morning, is some concern, not some concern, but some work to be done around ensuring that the underbelly, or the flip side, the other side of that coin, is there such that the banks can withstand severe disruption to their operations and ensure that the communities, the customers, and even internal stakeholders have what they need to continue to operate under unprecedented situations. So we're going to focus on that. Now, CPS 230, and we do love these CPS numbers. CPS 230 as a draft came out recently, so we need to talk about that a little bit as well, which I think is a fantastic move by APRA to bring together some of the other, to streamline the policy from a starting perspective, but also start thinking about how third-party risk management, cyber, how business continuity plans, and how operational risk all really are intertwined with each other. We'll get the final standard, I believe, at some point in the middle of the year, which will hopefully sort of sew together all these different elements to help the industry move forward. So let's get moving, and I think I can probably be reasonably brief on this page because we talked about it a little bit already this morning. But we have learned a lot from COVID. I think that operational resilience was not necessarily nomenclature that a lot of folk were talking about prior to COVID, I don't think. And we've managed to come through, the sector in Australia in particular, and many of the industries came through COVID incredibly resiliently, adapted very much to the changes and the challenges that the pandemic threw at us. But arguably, we all had time to adjust. And now it's very much around, we're learning from that. Yes, we can be resilient in regards to when we've got a bit of time, but can we really be prepared for some more unforgiving events? And on the slide here, I've mentioned a few around the recent cyber and the ongoing cyber attacks in Australia. This Lloyd's TSB outage for 3 weeks, so there's the concept of actually having not being able to see my transaction account or make any payments for 3 weeks if I was a consumer of Lloyd's TSB. That's back in 2018 still, but it sort of gives you a bit of a sense of the potential disruption that an outage like that could have on an organisation. And we're continuing to see ransomware cases and other cases like that. So that sort of sets the scene for us to then think about, well, what is operational resilience? And I don't think APRA's actually come out with a specific definition, but if we look at some of the papers and the words that they've put out there, it's very much around preventing disruption to critical operations. And that critical operations piece is important because there's some judgment there around what is critical. And so starting off with actually doing exercises around what are our critical business services that we provide to our customers and internally, which impact the communities that we operate in. And how do we ensure that those critical services can withstand severe disruption? So it's very much around having the ability to be prepared for severe but plausible scenarios, ability to adapt and have hedges and backup plans to enhance resilience. So we even have organizations now setting up parallel payment rails in case the main payment rail or then plugging into the payment rail is not operating. Ability to recover really quickly and ability to withstand. So we talk about being able to bend but don't break through various disruptions. So given all of this, Mandy, it's probably about time you spoke, sorry. Why is this so difficult, and why is the industry talking about it so much, and the difficulty in actually bringing all of these different elements together from an operational resilience perspective?
If you just kind of step back, I mean, the business of banking is complex, right? We operate in an ecosystem and we don't necessarily control it. So just for a minute, think about what must go right for an account to be opened. I'll just kind of tell you what's coming top of mind. You need your internet banking to work, you need your forms platform to work, you need your KYC engine to work, you need your fraud engine to work, you need a cloud hosting provider to be up and running, you need your core banking system and the messaging bus that works between your internet banking and your core banking system, all that good stuff to work. On top of that, just think about what must go right for a payment to go through. It's mind-boggling. We operate in an ecosystem we do not control. And as a small bank, I'll say we are lesser in control than larger banks. It's a complex ecosystem. There are so many interdependencies and interconnectedness involved. So that makes this whole thing around operational resilience and really getting our heads around it difficult. On top of that, you overlay the fact that we are hardwired into working in silos. So payments, for managing a payments, you'll have a product team, you'll have a payments team, you'll have customer service, you'll have an operations team, you'll have a finance team that does all this reconciliation. So we kind of don't think about our processes from a customer lens, because that's the way we are hardwired to think as businesses. That's the way we are organized, right? I mean, if you kind of think about typical organization structures, that's the way we are. But from a customer's perspective, it's when I'm opening that account, when I'm applying for a mortgage, when I'm making a transaction, it's that end-to-end experience. And when we talk about operational resilience, that end-to-end experience needs to work. And there's so many things that kind of connect into it that even if one of them does not work, you kind of have a complete disruption. And in the case of operational resilience, we have to make this beautiful equation work when we are faced with disruption. So, and that's why it kind of becomes really, really difficult for us. And then we got all these third parties we work with. The third parties have fourth parties. The fourth parties have fifth parties. Where does that chain stop? And how much of a control do we have in terms of the way their operations are managed, or their recovery time objectives match our recovery time objectives, or their fourth party recovery time objectives start to match our recovery time objectives? We have no control on that. But still, we need to kind of figure out how we manage this operational resilience, right? And we do a lot in terms of getting ready for it, but do we do enough? So I think it's just a difficult thing.
Yeah, it's very difficult, and it cuts across, as you say, so many different elements of the organization, which has been traditionally set up in all these different silos from all the business perspective, mid and back office, risk and operations sitting across those as well. So we also see this as a huge opportunity for the organizations to get a much richer understanding of their organization. And we see a lot of efficiency from an operations efficiency perspective to take out duplication, to automate various parts of the processes as well, focus very much on those critical business services as well. But this page articulates some of what Mandy was talking about as far as all the different dependencies. And one of the reasons I think APRA delayed the the 230 to the middle of 2025 was because of those negotiations and the discussions and the understanding of for the third parties and the fourth parties around what these regulations mean for the banking community. But in addition to that, as we've discussed this morning, and we all know this, but the increased reliance on technology, the increased reliance on data, the external threats just keep coming, and they will always be there. How do we deal with the broader ecosystem and the interconnectivity, the capabilities that other organizations can bring to us, and how we are very, very interconnected? And particularly in the face of disruption, how can that interconnectivity really help us? If we can't make payments to a particular cohort of the community, do we need to be partnering with other organizations to be able to provide those payments, given the interconnected nature of something like payments? There's also external expectations. Our customers in the community expect us to be, expect the banks to be always available and always there. And so it becomes a really interesting point when we're going through operational resilience exercises to say, if there was an outage, if I can't make payments, or if I can't allow my customers to make their payments, which ones do we prioritize first? Do we actually just have to pause them all? Do we have some manual processes that we need to put for those customers who are most in need for those payments? So all of that nitty-gritty needs to be worked out as you go through the operational resilience exercises, and enhancing the capabilities of the group. But one of the things that is really important, and Mandy, you touched on this can't be a risk-led exercise.
I'm glad you said that.
This needs to be very much around business engagement. They know these processes intimately. They know the customers intimately. But it's an APRA standard, and often the risk community is given this to implement. How does the industry ensure that there's real business engagement in a topic like this? Because operational resilience doesn't sound terribly sexy.
No, it doesn't. And I wish I had a magic wand to make it all kind of work, but it's not that easy. And I'm glad you brought up this whole thing about the role of risk management in it. This is not a risk management project, or this is not something that risk management has oversight of. This is a business requirement. Like you said, the community has expectations. Banking is a commodity. It's a utility. Think about it. We take for granted the fact that electricity supply will work, the water at our homes will work. Similarly, just expect that when I go to tap my card for a cup of coffee, it's going to work. So that's that community expectation. But business engagement, and really good question there, is really important to ensure that that resilience muscle is tested. But before that, go back to basics and start thinking about our critical processes. So how would we define our critical processes? Mapping the critical processes. Who is involved in those critical processes, whether it be systems, it be vendors, it be people, it be all those dependencies, and kind of mapping that out and getting the business involved in doing it themselves so that they can start thinking about it. This requires collaboration through the business. Like we said, it's not about, you can't operate in a silo to do this. End to end, it needs to be kind of worked through. But more importantly, I think, is ensuring that that resilience muscle is tested. Now, if I step back and think about how we usually test that resilience muscle, you have a crisis management team, bunch of senior people sitting in a room and workshopping a scenario which is plausible. It can get stressful, but we work it out. What we need to be able to, one, is engage more people through the business in terms of that scenario planning, because guess what? It's not the 10 heads sitting around a table making those decisions and making things work. It's the broader organization. So how do we get more people involved in that and build that resilience muscle? That is critical. And then also get our vendors involved. Yep. So it's not just business engagement, it's also third-party engagement. Yep. So getting our vendors involved in that testing, understanding, like I said, the return time objectives or the maximum outage objectives, and ensuring that that's tested. Or take one element of the process out. Take your message bus out from your internet banking and then see what fun there is, right? What works, what doesn't work. People don't even know. So you take one little thing out, everyone's sitting around the table and saying, so I think we have access to the AML platform. No, I think we have access to the data warehouse. Nobody knows. So it's getting that resilience muscle working and testing it is very critical. And the last thing I'd say is the governance around this. Ensuring that there's adequate governance and board engagement is going to be pretty critical for getting that engagement, because it's important. It's not something that sits on a shelf and it's picked out once in a while or when there's a crisis.
Yeah, that's great, Mandy. I think we'll see that the scenarios that get played out will become a lot less desktop and a lot more practical and real. Yeah. If this cloud provider were to go down, and we cut the cord here,
what would happen?
What will happen? And And to the extent that's going to be possible in the future, to actually do it in life or with a small cloud provider or with a small database that may go off, what will operate as a function of that? And I think everyone's going to expect to sort of see those scenarios be played out. Some of the key challenges that organizations face are on this page here. We won't touch on each of these in turn, but they do create quite a bit of complexity, but also areas that the organizations really need to think through and debate and come up with solutions to. There is no industry standard. And an example of this, I think, is in the draft APRA standard, CPS 230, they sort of in brackets say, for example, critical services could be, payments, fund administration, these sorts of things. A lot of organizations have taken that quite literally and saying, well, these are our critical services. Well, no, you've got to go out and define your own critical services, and the criticality has to be something that the organizations need to define themselves, and it's going to be different from every organization to the other. So sharing information across the industry is going to be very, very important, but there's no really global or local sort of industry standard around what good looks like here. We've talked about engaging the business, and that's really crucial. In fact, it's more than engaging the business needs to be driving these operational resilience in order to ensure that it actually becomes a consideration from a product launch and a customer experience perspective. And the new operating model concept is something we're seeing more and more. Like, who is accountable and who's going to be really driving, one, an overall program, but also resiliency, operational resiliency for our customers. And we're seeing more and more a chief resiliency officer, another role, you say.
Another CRO.
Another CRO. It is, yes. The chief resiliency officer is emerging in many organizations around the world to really drive the agenda forward on all of this. But if I look at all of this in the discussion that we've had, Mandy, and if you look at the APRA standard, there's still the draft, there's still quite a bit of focus around business continuity. Like, how is this different, or how do you see this being different to the business continuity plans that already exist in the organizations?
I think the way this standard is put together, at least the draft standard is kind of put together, it's taking 231, 232, bunching them up together, putting in some operational risk requirements as well, rethinking our definition of what a material service provider is, putting that lens of what a material service is, and also really making us focus. So CPS 234 introduced all the third-party risk management aspects, but this is really making us focus on, like I said, the interconnectedness and interdependencies within our ecosystem and on our third parties and on their fourth parties or whatever their third parties. And just seeing how we actually manage and control that and weaving that back into the way we would run the business in times of a disruption. So you think back to COVID, and you said we had a lot of time to adapt to it, but I disagree.
We didn't feel like it at the time.
We didn't have a lot of time to adapt to it. I remember discussions, at the ABA member groups as well, to say we need to be back, or not a day of downtime. We need to get people away at home. We don't have time to adapt to it, but we did it. Right, we did it, our muscle was tested, and we did not have a plan. Sure, we had a pandemic plan, but we did not know this would be global, did not know we'd be stuck at home for months at an end. But we managed to do it, but this was not part of anyone's BCP. But that's what is different here. We need to think about severe scenarios, and we need to think about, and yes, that can happen. So not think about it as, it's low probability of occurrence, so let's sit back, not the cute approach to managing.
Cute approach.
Yeah.
Just came up with that. Let's finish up the fireside chat, although it's quite warm outside today, so I don't know if the fireside's the right thing. But just final question is this is early in the journey for many Australian organisations. In Europe and the UK and the US have been on this journey for a while, although they've been given some nice long runway to get to the point of being up and running and implemented. Like, what will done look like and feel like, or what is done from an operational resilience perspective for you?
So I have good news for you and bad news for a lot of us. For the people who are planning to pursue a career in operational resilience, or all the consultants in the room planning to provide services around this, it's not going to get done. So great, awesome. And for all of us who have to practice this and make this, really come to life, it's not going to get done. Why is it not going to ever get done? Because The challenges we face are going to increase. They're going to get more severe. Every time, and we need to kind of think about this, and I was giving this some thought when we were working through a little bit of a change in our business, is every time you put in a new system, you change your process, you introduce a new product, you have to think about business resilience. Where does that change fit into your critical process? And you need to kind of rethink your plan completely to ensure that it's seamless. So it's never going to end. And that practice needs to be intensified, that resilience muscle as we refer to it, that needs to be continuously intensified. It's not a once in a year exercise, it's perhaps a more frequent exercise. It's not kept on the shelf somewhere, or, I mean, I don't think we use hardbound copies of anything anymore, but not sitting on your phone in a folder that you haven't accessed. So good news is it's not going to end, but the good news is this will make the banking system more resilient. And we will do right by our community by ensuring banking as a utility is always turned on.
So it's effectively going to be a new capability where the scenarios are being rolled through quite regularly around different critical services. The dependencies and mapping each of the dependencies need to be kept up to date. So effectively, it's a new discipline within the operations and the risk organisations, with the business leading as well.
Yes.
Thanks, Mandy. I think that's
us.
That's us, I think, unless there are any questions from Adam. All right.
That's us.
Thanks, everyone. Thanks,
Thank
Mandy.
you very much.